The vast majority of investors have been putting their money in the stock market believing that don't worry, nothing's going to happen because the Federal Reserve is going to turn around and print a whole lot of money. But is that really the case? I'm about to show you some information that you should be paying attention to. Let's begin. The global race to hike rates tilts economies towards recession. You see, this is the problem. They need to actually stop the fire of inflation, yet they know doing so is going to create a recession. So this is the balancing act that they can't do, but this is what they suggest. The Fed looks willing to tip the US into a slump if that's what's needed to beat inflation. Other central banks are ready to make the same gamble. We have watched this. Many different countries have basically said the same thing. Central banks are intent on driving the world's economy perilously close to a recession. No, not in a recession, just close to a recession. And then they basically say that, hey, they were late to the party, it was all transitory. You remember that? Fantastic. Anyway, by the way, a lot of the central banks were saying transitory, and yet we learned that wasn't the case. And you could see from these charts right here, whether you look in one place or another, it's essentially the same thing, and that is global forecasts for 2023 are sliding. US, Euro area, and the UK. Now, many different central banks have decided that now is the time that we got to be tough. We didn't want to be tough during 2020, and we wanted to take it really strong all the way into 2021 and continue to print and continue to keep interest rates low. But now we mean business. Is this really the case? Do people really believe this? I just don't know. Well, obviously, the Federal Reserve is hell-bent on making sure inflation is getting down, while the average investor is saying, I don't believe it. Well, you tell me. Let me know what you think in the comments. Here you can see about 90 central banks have raised interest rates this year, and half of them have hiked by at least 75 basis points in one shot. Apparently, it's a competition to see who can hike faster. Now, I wouldn't exactly say that that's the case, but certainly we are in a very different world than we were just 1 year ago. Things have really changed, okay? So there's more in there. I wanted to cover this, however. Jerome Powell's inflation whisper, Paul Volcker. Now, I do not agree that we are anywhere near that territory right now, of course, but let's just show you what they have to say. Aiming to reduce inflation even at the risk of recession, the Fed chairman draws on the 1980s playbook, quote, we must keep at it until the job is done. Now, the individual that works for the Wall Street Journal that wrote this article is what they call the Fed's mouthpiece. So information is fed to him to bring it out into the public, and then that kind of allows the markets to test, and then they can see how that all goes. One of the interesting things that he said in here was that what Powell had originally intended for his last speech. If you remember the last speech, it was like 8 minutes long at Jackson Hole. They were expecting this big thing. They were apparently looking for something else. And then Powell said, no. It's going to be heavy. We're going to do this, and we're going to make sure it keeps getting on this. And you really saw the market react to that very different response from the previous instance, the previous FOMC meeting. What happened there? Well, according to this writer, he suggests that that speech wasn't supposed to happen. This was something that could have been very different, but Powell really wanted to send that message home. Let me show you some more info. Check out the second paragraph. Fed officials thought investors were misreading their intentions given the need to slow the economy to combat high inflation. In a widely anticipated speech, Jerome Powell decided to be blunt. He scrapped his original address, according to two people who spoke with him, and instead delivered an unusually brief remarks with a simple message. The Fed would accept a recession as the price of fighting inflation. Very interesting. Now that's where they're drawing the Volcker parallel there, but it is very different, like I said. I just found it interesting to get this from this individual to kind of hear what he had to say. We just take it with a grain of salt, of course. We don't take that in, and it ultimately doesn't mean much. We're only taking their actions, but I think it's interesting. As somebody who studies ins and outs of the Federal Reserve now since basically 2007, I find it very interesting to say the least, okay? Quote, we must keep at it until the job is done. And of course, you see Volcker's autobiography, quote, keeping at it. Interesting, you could see Richard Clarida saying, until inflation comes down a lot, the Fed is really a single mandate central bank. And what does that mean? They have to get this down. Employment, not so much of a concern. And there's more in here about that. One of the governors of the Fed, Christopher Waller, said, quote, if unemployment were to stay under, say, 5%, I think we could be really aggressive on inflation. After it goes above 5%, the Fed will face obvious pressure to start making trade-offs between employment and inflation. So you see what's happening here. You see how they're doing this. These activities have been going on for a while, but what we're presented with right now is extremely challenging historically. The Fed bears considerable responsibility for the current predicament. Monetary policy was way too loose for too long. Can you believe it? Somebody in the financial industry actually has the audacity to say the truth? Wow. Anyway, the Fed was purchasing mortgage bonds and holding down longer-term interest rates even though the housing markets were booming. That was a major error. It should not have happened. And that is so important. Look at what they were doing, buying tens of billions, and still are today, tens of billions in mortgage-backed securities. For what? The housing market is on fire, or at least was on fire. This needs to stop. And the last part right here, talking about Volcker, you could see after Jimmy Carter made him Fed chair in 1979, Volcker unveiled a bold change in how the Fed would set interest rates, allowing them to rise dramatically. Vacillation and procrastination out of fears of recession or otherwise would run grave risks. A painful double dip recession ensued. You remember that? And then you see that sent unemployment to 10.8% in 1982. That was the highest since the Great Depression. If you read his last autobiography, it really comes through saying that what they wanted to do was to increase interest rates to a really high level to bring this down once and for all. So I believe everybody should pay attention to this because there's no telling what's going to happen here in the coming days and weeks and months. Right now, as you watch this video, the Federal Reserve meeting is on, and then the following day on this channel, I'm going to bring you exactly what happens. You've got to subscribe. I'll bring you what you need to know. Let's look at the next aspect here, because 4 drops after inflation warning adds to gloomy economic commentary. They're saying the same thing as the other companies. Look, we just don't have the parts. You got the supply chain problems. You got the job situation, all these things. They're all saying the same exact situation. It doesn't matter if it's automakers, it doesn't matter if it's finance, and so many other things. What about this? Walmart and other retailers are canceling billions of dollars in orders. Seems so unusual, doesn't it? Look, Walmart, Target, and more retailers are canceling orders to manage inventory excesses. Isn't this the exact opposite scenario from what we saw last year, the year before? We couldn't get enough stuff. We couldn't bring enough stuff in. There were ships waiting overseas. They're just waiting there. We can't get in. There's nowhere to put all this cargo. What do? Now today, Walmart is saying, hey, we got to get rid of all this stuff. Isn't that so strange? What's going on here? Is it the lack of demand? Or did they just order way too much stuff? Or is it the timing was way off? Maybe they were hoping to get that 6 months earlier and now the Christmas stuff wasn't available or the summer stuff didn't come in at the right time and they're just trying to just offload that. It's very concerning. Right now at this time, we are supposed to have Q4 coming in, and anybody who knows this business, whether it's myself or e-commerce or other people out there where you're bringing in products from overseas, you do that now. Now is a big order time, and you just get it on those boats and they come over, and it takes a long period of time. Getting them into the warehouses takes a long time. Like the whole process is long normally. But what's going on right here is unbelievable to say the least, that they're just saying we need to just get rid of this inventory. Very strange, very odd. This is just, my experience. I'm trying to bring that in for you. What we're seeing here, unusual. Let's look at this. You will see Bridgewater. Now, you know Bridgewater from Ray Dalio. And one of the individuals that works at Bridgewater had some interesting things to say about inflation. And of course, gold. Bridgewater, she said, is bullish on inflation-linked securities and gold, to name a few investments in this environment, as well as Chinese equities, whose valuations she calls attractive. That's because, of course, they've come down so much. And a way to get diversification in a portfolio. Bridgewater is bearish on equities broadly, including the United States and including Europe. So it was just interesting to see some very different talk from what you compare to many others, right? You wouldn't hear that from a lot of people, and I just wanted to show you that. And they basically said that the Federal Reserve is in a very tight bind. They can't increase too much because they're going to slow the economy down dramatically. And if they don't increase enough, well, then inflation's not going to come down. At the very bottom, she points something out and says basically, yes, while inflation may have peaked, you've got one that is extremely, as they say, sticky, and that is related to real estate, as she says here, rent and housing. This has been incredible for a lot of people in a unfortunate way, that they've been paying more and more and more, whether it's their rent or whether it's their mortgage payments. Right now, as we have seen, it's just been unbelievable, and that puts a heavy burden on the individual because you've got to live somewhere. Now, you might be able to move somewhere else, but you still got to live somewhere, and those costs have been rising just about everywhere. And here we have the Fed dilemma. What's really going on, okay? The Fed says inflation is a priority. Unemployment rate can rise if needed. They are going to go for this. We talked about that a few minutes ago. Other central banks are doing the same. You look around, inflation is up, interest rates are correspondingly doing the same thing. Companies are holding on to way too much inventory, whether it's Walmart, whether it's Target. This happens to be sort of a trend. And this is the exact opposite of what was happening a year and a half ago. Looking at the layoffs that have begun, particularly in tech and finance, it just shows us what's been happening over the last little while. So remember that now is the time to be prepared, take the actions, take the steps that you can today. Even a few things that you can do, even a few small actions are going to make the difference. As always, you've got to subscribe to the channel, and I'll see you on the next one. Take care.